Good morning, everybody, and thank you very much for joining us on Morning Markets from True Potential. Today, we'll look back on asset market performance from yesterday, think about a little bit of some of the drivers behind that, and just look at a couple of charts that I think help bring to life the current performance of both the sovereign bond market, but also what we've been seeing in currency markets. So just looking at yesterday, really a story of how different geographies really performed over the course of the day. If we look here in Europe and in the UK, we saw pretty good performance from the main equity indices here, with the Euro Stoxx 50 up about 2.5% on the day. In the UK, the main market was up about 1.3% as well. So good performances there. A large part of that continues to be that theme around rotation within equity markets and focusing more on the value or cyclical areas of the equity market, those areas that are more sensitive to the improvement in the economic environment as we move through from this lockdown phase into that reopening and an acceleration of global growth over the coming number of months. In the US, quite a different market performance yesterday. We saw the Nasdaq 100 itself quite weak on the day, down about 2.4%. Within that, if we dig into it a little bit more, the 100 largest stocks within the Nasdaq fell close to 3%. And within that, we saw the Nasdaq Computer Index, so that index that reflects some of those more higher growth names, falling 3.8% on the day. Contrast that, however, with what we saw in the S&P 500, which was down about 20 basis points in the day. There is overlap between those stocks that are represented there, but what does that show us? And it illustrates just quite neatly that rotation that we've seen within equity markets, those more cyclical areas of the S&P 500 supporting that broader index over the course of the day. And by that I mean if we look at materials, industrials, financials, transport to an extent as well, those areas all in positive territory, helping the S&P 500 have that much lower fall relative to the more growth oriented Nasdaq. Really then, when we think about and dig into what are some of the drivers that we could think about as being influential in that move, it's very much really about what we've been discussing over the past 4 to 5 weeks, that move in sovereign bond yields. Again, that continued yesterday. We saw the US 10-year move closer and hit 1.6% yield over the course of the day. And that really did, I suppose, impact into those higher growth, more sensitive names to changes in real yields, that changes that we're seeing within the bond market at this point in time. It's also related to inflation expectations. If we look at inflation expectations in the US, they have gradually moved up from that low point that they touched earlier in 2020. What does that look like at this point in time? Well, if we look at 5-year forward inflation expectations around 2.6%, we look at 10-year forward inflation expectations around 2.2%. And that's really the key driver of what's happening within markets, that rising inflation expectation at this point in time. The other thing that I think is just worth noting there is really how 5-year inflation is higher, or 5-year forward inflation expectations are higher than the 10-year forward. And I suppose that does give us some comfort that inflation expectations continue to remain very well anchored over that medium to longer term. The other point that I just want to make around the US sovereign bond market is just the issuance calendar over the course of this week. We've got about $120 billion of issuance coming into the market. We cast our mind back to the final week of February. It was the difficulty with an auction that really exacerbated some of the moves. So those 3 auctions, Tuesday, Wednesday and Thursday, will be closely watched really to see how they go and how that issuance is absorbed into the market. And you can see that in the chart below, just how really 10-year yields in the US have moved. So that movement up over the course of the past couple of weeks, and you can see that real acceleration up to that 1.6% level that we closed last night. The other area where real yields are having an impact is really into currency markets, which is making the dollar more attractive at this point in time, and we're seeing that coming through in terms of the trade-weighted dollar and its performance over the past number of sessions. I've just put this chart in to let you see. So this just looks at the Dixie, the dollar on a trade-weighted basis, and you can see that real downward trend of dollar weakness from sort of April of last year. What you can see there as you move closer to the right-hand side of the chart is an improvement in the dollar, and the dollar strengthening on a trade-weighted basis. Yesterday we saw it strengthen a further 0.5%. Even more evident, and the trade-weighted doesn't include emerging market currencies, but we saw a very strong performance of the dollar yesterday against a number of emerging market currencies, particularly if we look at the Mexican peso, Brazilian real, the South African rand. Strong performance from the dollar there yesterday. So that's another trend that we're just watching. Remember, we've been discussing how it has been one of those key trends, and you can see it in the chart, really, dollar weakness. Is this a bit of a change given what's been happening in sovereign bond yields? Just finally, on economic data from yesterday, a very, very light calendar of economic points. I just wanted to mention a speech by Andrew Bailey, the Bank of England governor. He discussed yesterday really just the policy toolkit that's available to the Bank of England. He discussed the work that has been ongoing on negative interest rates. Also discussed the inflation backdrop, and really just saying that, you know, it's something that's being monitored, but at this point in time they do feel the sort of the slack in the economy. If we think about unemployment, we think about the levels of activity currently, they're not seeing that as a challenge to their medium-term target of inflation. So at the moment, a bit like other central bankers, pushing back on where the bond market has maybe got to, or the gilt market here in the UK has got to, and just reminding people of the not insurmountable challenges that the economy has to navigate its way through over the coming months. I'll leave it there, but please do join us tomorrow and do subscribe on our YouTube channel. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.